moving on with the second part in our tips and tricks how to trade the US dollar Japanese yen, regardless that you're trading the call option side or the put option side. It doesn't really matter. Here are generalities, and we touched so far the basics of the US dollar Japanese yen, in the sense that this currency pair, it is highly correlated with US equity market. So this is the first thing to come to mind. It is highly dependent on US and Japan monetary policies, definitely. So knowing when Bank of Japan and knowing when the Federal Reserve of the United States are meeting and issuing the monetary policy statements is vital for trading the US dollar Japanese yen. Out of Japan, the most important news are the CPI, inflation, and the Tenkan report. Central banks' interest rate decisions, of course, and press conferences are the ones that move the pair, and therefore it is extremely important. How about the US? Well, in the US we have the classical now CPI, of course, number one CPI, but in US you may be interested to watch the core CPI, as the core CPI is the favorite way for the Fed to measure inflation. What does it mean, core CPI? The core CPI means the actual CPI, or the inflation level, excluding the cost of food and energy, and therefore you will have different values for the Fed. So sometimes the CPI moves to the downside, but the core CPI is stable and markets would not move the most. Besides the CPI, of course, we are talking about the GDP, or the gross domestic product. This represents the value or the total value of goods and services that an economy is producing. Then, of course, we are talking about consumer spending, which is extremely important. Why? Well, this is exactly the problem that it is now in the world. Lack of inflation. Well, lack of inflation is being given by the fact that the consumer is not spending that much. If the consumer is not spending that much, then the economy is not improving, or recession starts to kick in. So consumer spending is the vital tool for an economy that will create inflation, for an economy that is growing, and therefore for an economy that should expand. Besides this, regular jobs data, the non-farm payrolls in the United States, is crucial. The NFP is being released on each and every NFP, so the non-farm payroll. It is being released on each and every first Friday of each month, and represents, of course, the jobs created, with the exception of the agricultural sector. Non-farm payrolls is important because the Federal Reserve in the United States has a dual mandate in comparison with other central banks. First of all, they will move rates, or they will adjust monetary policy based on the inflation level. And second of all, they would do that with the monetary policy based on the jobs that the economy is creating. So their job, if you want, is to create jobs. So therefore, when non-farm payrolls on Friday are released, US dollar Japanese yen are moving extremely aggressively because of the correlation with the equity markets, of course. Now, if you go on the economic calendar and you try to watch on the economic calendar everything that it is in here, and you want to look for important events in red, these are the important events in red in here. And also you want to look at the events out of Japan, so when the Japanese yen here comes. And of course the most important ones are monetary policy statements, like we already said. Bank of Japan press conference, take a look here, on Tuesday. And we also have, out of the United States, all these events in red are important. But again, try to filter them through FOMC statement, federal funds rate, FOMC press conference, FOMC economic projections. These are events that are setting the monetary policies in both US and Japan, and the US dollar Japanese yen will be all over the screen. Thank you very much for being here. Keep in mind that this is again fairbuynobbyoptions.com, and we just looked at some tips and tricks in trading the US dollar Japanese yen. Hopefully this was useful. Have a great day. Bye bye.